The narrative says to the moon, the positioning saying, not so fast. There's a credibility gap here. Prove it to me. Show me the productivity.
Is it just waiting for Godot? Could it be?
Yeah.
I'm waiting for Godot, waiting for the correction.
Waiting for the correction, positioning themselves in a way that says, you know what?
It's going to come. I mean,
let's hedge ourselves here.
Welcome to another riveting edition of Risk and Return. I'm Charlie Gasparino from Fox Business, from the New York Post, from Twitter Fights. I'm here with my partner in crime.
So many of them.
Yes, so many of them. We can't. By the way,
lost count. All comers, big, small, doesn't matter.
Losers. Most of them are losers, though.
But really, some notables too.
Yeah, I don't discriminate. I treat the losers just like the big guys. I treat the guys that are living in a penthouse just like I treat the guys living in their mom's basement.
Exactly.
How's that?
Right. How about that?
But I would be remiss to remind the world that I'm here with my partner in crime, the founder, creator of S3 Partners, the largest independent private data company on the Bloomberg network. The source of most of our information here. This is the juice that keeps the electricity on at Risk and Return. It's S3's great data. Before we get into some of that, let's go through a few headlines, Bob. I just want to say we're getting good reviews. People like our rapport. They like the fact that we don't really argue with each other.
No.
Should we do that a little bit just to mix it up? Just do a fake argument or something?
We could do like a kayfabe. Right? We can do kayfabe. We can do.
So
kayfabe.
when I'm on Fox Business and I do the Big Money Show regularly, my old friend for many years is Dagan McDowell, but we go at it.
Right.
And people are like, you hate each other. No, we love each other.
Love each other.
Now those aren't really kayfabes.
Right.
We like to mix it up and we forget about it literally when the camera's off. And so you just remember this with TV. People work together. Part of the TV and the broadcast experience is to have a little heat,
a
little juice. But I think what sells us, Bob, is that we get along and we agree, and that helps. It's a decent, as I was told, it's a relaxing, informative ride to the Hamptons. Risk and reward.
And Risk and Return. Put our audience in that car on the way to the Hamptons, because if you listen to what we say,
you'll be able to buy a home in the Hamptons.
That's exactly right.
Let's get to a couple of headlines. Kevin Warsh today.
Yep,
confirmed. Pretty much on party line vote. Kevin Warsh is clearly a perfect guy to run the Fed. So it just shows you how deep the political dysfunction goes in Washington. Anybody that votes against this guy is out of their minds. I mean, there's nothing in his background. Right. I mean, he's a Boy Scout. He's smart.
Right.
He's battle tested. Remember, he was on the board of governors during the financial crisis. He
doesn't need money.
So he's not doing this for the fame and fortune. Jerome Powell was, maybe he's a nice guy, but in many ways he didn't do a great job. Missed inflation, maybe cut too early. Took too long to start raising rates. Be that as may, he's going to stay on at the Fed, which will be interesting. He'll be a thorn in Trump's side until they clear him of this investigation.
Did they change his parking spot? I don't know.
I wrote a column about how they were thinking of ways to get rid of him by getting rid of his parking spot and putting his office in the basement where it's flooded or something like that. So I've not been able to confirm if that's happening right now. I did run that by the White House, and it was funny. Like, I was expecting, like, you're right there. You're coughing because you're laughing. I ran this by the White House, and I was expecting, no, not true. They didn't say that. They said, thank you. We'll refer you to this. And they sent me a tweet that Trump put out about Powell, saying, oh, he's staying around because he can't get another job. That's what they said. So they didn't deny it. Whatever. Anyway, that's happening. And, Kevin's got his work cut out for him. We have a war. We have a price spike because of the war. We have a hot inflation number recently. Tariffs. I hate tariffs. I think if there was one unforced error in the Trump administration economically, it was that he's done so many great things on so many different levels, in my view. Aside from listen, I don't agree with some of his rhetoric, like dancing when someone dies, saying thank you, saying good, I don't agree with that. But economically, I 90% except for these tariffs, and I think that's going to be that may hurt his legacy in the long run, particularly if we don't get out of this Iran conflict. Bob, what's going on? I mean, why don't we just bomb the motherfucking shit out of them and move on, or not and move on? $7 gas when during Labor Day or Memorial Day weekend.
I like a strategy like Sun Tzu, right? Win without fighting.
Yeah, I'm with you.
If we are putting our hardware there and we're doing the things necessary at a minimal cost of life, even though we're spending treasure, I'd rather spend treasure than spend blood. And if this works and we can wait them out, then it's worth. And I understand there are a lot of people out there that would say gas is my livelihood, and we understand that it's not all New York City. There's a big country out there that everybody makes their money differently.
And by the way, they don't we take public transportation, stuff like that a lot. I mean, I take MTA to get to Connecticut,
It's fair. But I think if we could spend dollars rather than blood, I would do that 7 days out of 7.
Yeah, I know, but it's just dragging on. It's like, and they're clearly yanking his chain at some point. I mean, listen, I think the some point could be when he comes back from China with Xi.
Could be.
We could see that place lit up.
Could be.
Because I think when he hits knowing Trump, and I've known him for a long time, he hits a limit and is like, fuck it, blasting away here. So that may happen as soon as this weekend. So be prepared for some market volatility if that's what happens. I mean, I could make that trade 10 different ways. I can see it's coming to an end. We've produced a lot more oil, or you can see the markets trade off dramatically. I mean, who knows? I'm surprised that markets are at all-time highs already. At least stocks are right now, despite hot inflation and everything else.
Well, one of the things that we measured a basket of the most shorted stocks by the highest percentage of short interest as a percentage of float. That basket of stocks has outperformed every index.
Oh, really?
So the narrative is Iran bad, inflationary numbers bad. You got Warsh who wants to be dovish but can't be dovish, and all these different things that are negative. Yet, if you look at what's being bought, the riskiest assets, like the most shorted stocks, are being bought.
Oh, really?
Yeah. And that the return of those stocks has been through the moon.
Well, one of those.
So that tells you risk is on. Right?
Yeah. So risk is on. But one of those stocks that is not being bought, at least the last couple of days, is GME. This is after Ryan Cohen's takeover attempt of eBay.
He's still at it, right?
He's still at it, maybe. They're on firm ground to deny it. Remember, let's just unpack it. He made a bid for eBay. GME remember, he is the CEO of Chewy, that dog food thing, right?
Yep.
Made a lot of money on that.
Yep.
Then he got into GME, kind of, did a good job kind of like paring down the company and turning into something else. I mean, he used the rabid Twitter, the rabid social media, Reddit following meme crowd to finance everything, right? Because he diluted the hell out of his shareholders on a company that doesn't really make that much money. They bought it for God knows what. He dabbled into crypto for a bit. And then he's looking to his next thing. He's got $9 billion in cash, and he makes a bid. And his company, GME is like $11 billion market cap.
I don't think it's that high.
Yeah, maybe not even that high.
I thought it was 8 or 9.
It might be, but the other one's like 53, right?
Yeah, and that's the point.
So now, how do you pay for that? Well, he said he could borrow $20 billion, but he would have to dilute shareholders of GME. He would have to issue more shares, and he would have to, which is bizarre, he would have to convince eBay that they should take GME shares as collateral. Now, as someone who just covered a hostile takeover, Paramount Skydance winning the war for for Warner Bros. Discovery over Netflix. They went hostile. They came in with all cash bid.
Right.
They had lines secured. They had Larry Ellison's, who's the Oracle co-founder, his net worth lined up. They had cash. Okay. I don't know how you tell someone to take GME stock.
Well, maybe that's not the point. Maybe the point is I'm in the market to buy something. I can't buy eBay, but who knows what phone call comes in the other way? Well, we know you can't buy eBay, but you could buy us.
Would it be great if you bought AMC?
Oh my God. You need, honestly, I don't know what you would need, like you would be busy all day, every day.
That is such
You'd be so busy.
perfect, what do they call bookend to this meme stock debacle, that the guy who brings back GME, but it's kind of limping along, it's well off its highs, buys the biggest meme stock debacle of them all, which is, well, not the biggest. There's ones that went out of business. But AMC is not quite out of business. But if you factor in the reverse stock split, it's a 13-cent stock.
I don't know. I honestly think that he is there in the marketplace saying, look, we want to buy something.
Yeah,
we're going to acquire.
Yeah.
We're going to do something. There is a absolute narrative with him that he's a credible manager and a credible person and did a real thing. So I'm now in the market to buy something.
Yeah, I mean, listen, he did a very credible job with Chewy, obviously, with GME as well. I mean, he pared down the stores. Yeah. There's not much of a business there, so he has to do something else. I will say this. I don't think he helped himself when he started explaining his bid. I was at Milken last week, as you know. We did the show from there. And there wasn't one sophisticated investor, and they were all there, who said, well, that guy, when he went on CNBC, knocked it out of the park. He really convinced me. It was just, he did not do his credibility. Not saying he's not a credible guy, but I think with investors, his credibility kind of took a huge hit. He was sort of amorphous in terms of the financing, and he didn't come with his A game. Now maybe he got better during the week when he did other interviews. I didn't interview him, but it was not very good, and I think that hurt him. That hurt the price of GME. That hurt the chances of the deal. And eBay, I think, is on very strong ground saying sayonara, unless And there was all this talk about him getting the Saudis involved. Like, we should point out that sovereign wealth funds are now redirecting cash, right? They have lots of infrastructure to build. They have to build a pipeline, right? After if they want to evade the port of the Strait of Hormuz.
Need is local; it's not global.
Now it's local, right?
Right.
And they're diversifying, and I don't think they're diversifying it to GME stock.
I don't know.
No, we'll see. Maybe they are.
Maybe there's somebody's son or daughter, probably son, in that part of the world that likes the product.
You might be right. You can't count this guy out, right?
You never know.
You never know. I mean, he's not and if people want to keep buying his stock and keep getting diluted, that's their business.
That's their business.
We don't. I can laugh at him, but I'm not going to tell you not to do it.
Yeah,
it's your money.
Yeah.
Last but not least, Pot Incorporated. Now, I know this is near and dear to your heart, given your subscription to High Times. You've been subscribing to High Times since you, 15?
13.
13, right. You got the little, pot thing around your neck. No, this is not Bob Sloan, just so you know. Bob Sloan is quite the opposite.
So just to chime in here for a second, we're almost, I think we're past our 1-year anniversary, okay?
Okay.
And, you would approach me about doing this podcast. And you said to me, you'd be the perfect straight man for me. And I said, Charlie, I'm not confused.
That's true. And by the way, one of our first guests was Marco Hodes, who is the former famed hedge fund manager, short seller, who's now involved in Pot Inc. He's an investor in something called Glasshouse Brands. Just so full disclosure, I sampled some of the product. It does work. The gel works tremendously on stiff joints and
better recovery.
Yes. The gummies, there's a gummy that makes you sleep better, which I've tried and it works. There's a gummy that makes you high, which I'm not a fan of. kind of maybe
Yeah, that stuff for me never mixed.
too high, right?
Yeah, just
It
never.
just-
It just was never my thing.
But anyway, these
As
are
you know, we like a good martini. But
yes, I know
just
that too.
That's not my thing.
But these are real people that are behind this business. Now,
Yeah.
with the problem that they have, the way the law is written, and even with Trump declassifying it from something known as Schedule 1, which is like heroin,
Yeah.
down to Schedule 3, which is like a prescribed substance, anabolic steroids, Tylenol, codeine, is that banks still won't touch it, like big banks. Like you could cobble together 15 credit unions probably.
So why do that from 1 to 3? If the net effect is there's no financing,
now
is that a gradual step?
yeah, it's a gradual step. I mean, listen,
happens?
this is very controversial in the Republican Party.
Yeah,
and
that's
so
probably why
there's so now this is where it gets interesting. There is a bill, a safe harbor bill, in the Senate right now. It's actually in the House. It hasn't been introduced to the Senate. John Thune is against it. It's called the Safer Act. It literally gives the J.P. Morgans of the world. So a pot company doesn't have to go to, and the New York Stock Exchange or the NASDAQ, Goldman Sachs. So a pot company doesn't have to go to Canada to list or like cobble together 15 small banks.
Right.
It could go to J.P. Morgan. By the way, when you go to, and people forget, like if you do any small business, I'm starting an LLC, for example.
Right.
You go to one bank, they do everything for you. That's what you want. That's a
right.
banking service, credit card, this,
Everything,
that.
right.
And, these pot companies don't have that. They have to go to multiple players because they're debanked. This thing will allow them to get banked. It creates a safe harbor where there's no legal liability on the JP Morgan side if they should underwrite a deal and something happens and then they sue everybody. It's like sometimes you sue the financiers.
Sure.
The government theoretically could go after you. That is stalled in the Senate. That has not gotten a lot of. It's not even in the Senate yet. Thune, Majority Leader John Thune's against it. But I interviewed Tim Scott
At
Milken, the South Carolina senator, the head of the banking committee, chairman of the banking committee. He suggested that things are starting to like warm up here. Like they're like the blue wall that prevented this bill from seeing the light of day is starting to crack a little bit among Republicans. And he said, listen, he laid out the terms. He goes, he doesn't like pot. He thinks it's 300 times. He says it's 300 times stronger than it used to be, and that's true. You don't want a nation of stoners, but there are medical uses for it, as we know. That's why Trump declassified it or reclassified it down. And also, you don't want companies in the U.S. sitting and having piles of cash in like the basement. That's money that could be put to use.
5 years ago, when De Blasio basically made it, or more, maybe it's 10 years, 10 years ago now, when De Blasio basically made it okay to smoke pot anywhere in New York City, the idea that it was a gateway drug was laughed at, right? All this research came out and said it's not a gateway drug. It's not really that harmful. Now, 10 years later, all of a sudden, there's a lot more research out there that says it is. So I'm very mixed about this.
I'm with you. And Tim Scott was mixed. But I think one of the things that if you responsibly regulate it is you might be able to open it up on the research side for medical uses. And, I mean, if I'm an adult, I should be able to smoke a joint. I don't think I should be able to smoke it outside, or in like close spaces.
Right.
I'm sick of that.
Yeah.
But I think if I want to sit in my house and
I agree with you.
Roll a joint and smoke and watch TV.
I hate walking down the street and getting bombarded.
It's just ridiculous. And if you have kids, they got to deal with that shit.
Right.
I don't think I think that the libertarian in me says there's a way of doing this where it's regulated and controlled, and it's not a free for all.
Right.
And so between that and what we have now, it's funny. These pot companies can't be banked, but the use of recreational pot is so out of control in big cities.
You can't walk up and down some of and it still is some of the highest square foot retail space in the country, right outside this office building.
Right.
Is you have cannabis stores.
It's
everywhere. So someone's financing them. No one's affording that rent.
I know. It should be regulated. We need to regulate it and
they're there
and get the business maybe out of the shadows. That's what Cohodes would say.
I'm always a fan of regulate it when it comes to health.
Yeah.
When it comes to health, big fan of you should know what you're
putting in your body.
Yeah.
Yeah, I mean, this stuff is pretty wild. I know people that
And
have.
as an adult, you should have the choice, but you should know.
I know someone who has a kid who had just he was addicted to it.
Yeah.
And the stuff is so potent, it was like almost
No, there's a lot of
hallucinatory.
I think a lot of the depression. We could go on and on about that, but knowing what's there and knowing how to regulate it, I think, is a big thing.
It is a $50 billion business.
Yeah.
If they can ever get banked, it
It'd
will
be 10x,
quadruple. 10x.
10x.
Yeah, 10x. So we're talking about stuff can really pick up. There are a bunch of pot stocks. There's a pot stock index. So if you're interested in that, feel free to.
We're gonna have to start tracking that.
I think we should.
See if it goes up in smoke. See if people shorting it.
Maybe after this broadcast, the stocks will pop. But yeah, there is some, just based on what Scott said, and Tim Scott's a great guy, by the way. I mean, he's just a really solid person, solid lawmaker. He laid out both sides, and I think it sounds like he suggested that he's moving towards warming up this being banked in some coherent way with a regulatory framework around it.
Yeah.
That's it from my headlines. By the way, did we hit records again today?
We did really well last week.
Oh, okay. Let's go. Let's toot our own horn here.
We have been picking up steam very steadily. I think it's our persistency, but I also think it's because we're hitting on those stocks. One of the things that, if you could pull it up on the screen, let's look at the Grok 10. Let's talk it through. So, one of the things we asked Grok, we said, what are the 10 most searched for names on X? And it turns out number 1's Robinhood. Number 2 is Palantir. Number 3 is Rocket Lab. Number 4 is C3 AI. Number 5 is AET Space Mobile Inc. There's MicroStrategy, Hims, Her. So a lot of, and then quantum computing as the bottom 10. Those are the top 10. And one of the things that we've noticed is that, I was on Bloomberg News yesterday doing an interview, and Katie Greifeld was very nice in saying that one of the words that we've actually socialized in investing is battleground.
Ah, really?
Yeah.
Nice.
And that was very nice of her and Romaine Bostic to say that.
It's right up there with Hey Boomer. No, okay Boomer.
Well, you know what? It may be, right? We'll popularize it more. But what's fascinating is that when we ask Grok, what are the 10 things that actually the X universe cares about? It turns out it's a lot of the names that come up on our radar. Okay. So you're saying, why is this show popular? It's because you're bringing news,
right?
You're bringing your Rolodex. Who else interviews, potential presidential candidates at Milken?
True.
Okay, which is true. Who else has CEOs of the world calling them in the middle of the show? And I've seen it happen.
Yes, we will not say their names.
We will not say, we'll never say their names. But you know what I'm talking about. And then we have the data that the investing world, at least probably the retail investing world, and some of the professionals too, we talk about it all the time. We've talked about Robinhood all the time. We've talked about Palantir many, many times in the show. We've talked about C3 AI many times in the show. So we're hitting on the things the algorithm cares about. And we didn't do this on purpose. We actually just had the idea of, hey, let's just self-check our work. But one of the trends in this line for everybody out there, since you are looking at a lot of these stocks and you're following them, the long-short ratio, which is AKA battleground, it's turning more negative. So, for example, I can tell you Robinhood used to be like 11-1. Now it's like 4.5-1. So, in other words, the amount of long to short used to be like 11-1. Now it's 4.5-1. So, in other words, the active long positions are paring down. Shorts may be staying constant and rising. And that trend, you're seeing that along most of these names. So people are hedging, right?
So is this there's
hedging their enthusiasm.
I was going to say, there's a lot of talk. I mean, I keep reading these headlines. Well, we've had a market top. This thing's going to implode, and the markets are heading. The Nasdaq's heading for a correction. Correction at someone came out yesterday. I can't remember, some panicking, but who knows? That sometimes panicking are right. I've seen it.
I mean, There's the we would say the opposite, right? So it's I think it's the opposite, which is semiconductor. We talked about it last week.
Right.
Basically Intel is up 5.5 times. I mean,
Right.
in a year and change. And when you look at a stock like that, you say, "Wow, things going to the moon," right? But look at this chart. This is a really fascinating chart here. You can see that the active longs to short ratio, which is in green on the chart there, was at 7x. Now it's dropped to 4. Why? And because the active long positions, right, been going up, but the short side of the market has been increasing more.
Yeah.
So the narrative is semiconductors are great, NVIDIA is great. This is a chip-driven economy, endless productivity, blah, blah, blah. But the data is telling you something different. The positioning is telling you people are hedging their enthusiasm.
Well, they know a correction's got to come. I mean, who knows when?
But we're showing it to you live. We're showing you what the positioning is versus the narrative.
I know. So there was a great investor. I think he since passed away. Forster Fries. Remember Forster Fries?
No, I did not know him.
Okay, I covered it. I wrote a front page story in the Wall Street Journal about him. How this great investor got flummoxed by the tech bubble. What he did was he got whipsawed. He got out too soon. Got back in when it crashed. And in terms of getting out too soon, he went all in cash, or much of his portfolio in cash. I think it was the Brandywine funds, and he missed the market,
right?
But he was technically right. This thing was going to crash at some point,
right?
Okay, it's just timing that is like impossible. So we all know this thing is going to correct. Okay, what we don't know is when, and that upside of when could be tremendous. And if you're a professional money manager, you can lose business by missing that upside, even though you're conceptually right. But that's one thing good about journalists. We don't have to worry about that. We could just say market's overvalued, watch out. We're not, we don't have, real skin in the game. I just remember during the .com bubble, a great journalist named Floyd Norris at the New York Times wrote a column. He was very bearish for the longest time, and we would say, well, someday he's going to be right, and then someday he was right. But he missed that wicked upside.
Look, the one sin in money management is making a call and being alone.
Yeah,
it's very unforgiving.
I know.
If you make a call and you're alone, that's a very unforgiving place.
Stan Druckenmiller once told me he went short on, subprime and stuff like that in 2005, 2006.
Yeah, he was early.
He was wrong, and he said he had to stick with it. It was rough, but he stuck with it. And in 2007, it turned, obviously. And Stan is one of the world's great investors, and made a ton of money. He was like he's not in the Big Short, but he should be. He was that good.
So we're seeing a lot of this in the semiconductor space. Intel, if you look at the SOX index, for example, you're seeing the same type of thing, where you see the long-short ratio. If we go back to the previous screen, thanks. So you look at the long-short ratio in green, it's falling, right? And it's telling you that even though the longs added something like 300 billion, shorts added about $200 billion year to date, but the rate at which those short positions have been added is faster than the long position. So we've also, shown that the rate is faster.
So we're talking, that's a warning sign.
It means that people are not totally bought in. On the other hand, you have, as we started the show, you have two things, and then we can go to the next slide. Let's fill that in to the Z-score. Yeah,
there we go.
So if you look at the Z-score, I love talking about Z-score because I think it's a great data.
I always have to ask you to remind me, what is the Z-score again?
Just think about data compared to itself over its own history. So if I'm 3 times bigger than my own history,
right,
It's telling you that there's an anomaly here, right?
Okay.
There's something happening in the investor base that's causing them to do something outside the norm.
Interesting.
And so if you look at Intel, Qualcomm, et cetera,
They're not quite 3. They're all 2s.
well, that's a lot though,
Okay.
right? 2.8 at 3, anything over double is a lot, right? It's 2 standard deviations,
Right.
almost 3 standard deviations away from the norm. So you're talking about something that's well away from the middle of the bell curve. That's what the data is telling you.
Interesting.
So this is telling you, yes, there's a lot of euphoria around chip stocks, but people are not totally bought in. The narrative says to the moon, the positioning saying, not so fast. There's a credibility gap here. Prove it to me. Show me the productivity.
Is it just waiting for Godot? Could it be?
Yeah.
I'm waiting for Godot, waiting for the correction.
Waiting for the correction, positioning themselves in a way that says,
It's going to come. I mean,
let's hedge ourselves here.
It's definitely going to come. We don't know when, but it's definitely going to. And it might not be the .com bubble bursting. That was more cataclysmic. And,
to me, if you'd said 6 months ago, gas is going to be in some places $5 a gallon.
How about 7 in California?
Okay. But forget California because the taxes are so high.
That's-
But just,
right,
that's
that's
across somewhere in the United States.
That's a banana republic as far as
gas is going to be $5 a gallon. We're going to have like half our Navy in the Persian Gulf. We'll have attacked and bombed Iran. I could give you a litany of things. And, the Dow's going to be over 50,000.
Capture Maduro.
All these things. You would say there's absolutely no effing way that would happen.
I doubt so.
So I think what modern markets is telling us is that, everybody wants to say there's a correction coming, but that talk almost means you're not there.
Oh, interesting. It's always like when you don't expect it, kind of.
It sneaks something sneaks up.
It sneaks up. I remember
and so look at the SaaS apocalypse, right?
Yeah.
AI has been around for a while. Agents changed a lot, but then all of a sudden the narrative took over, right? And this is why we're talking about positioning versus narrative. The narrative in today's market is really trailing. It's very divorced from what the actual positioning is saying. This is what we're trying to show here. And that sometimes that unwinds. There's a tsunami of narrative.
Right.
AI being and software being one of them that happened.
But it stopped.
It did.
I just reminded me of when you say like when people are talking about it, it often doesn't happen. So there was something known as the credit crunch in 2007. This is like the beginning of the housing crisis, where the Fed was now actively engaged, lowering rates. Everybody thought we'd get out of this thing. I remember every CEO at the time, John Mack, this one, that one. Oh, we're in the 7th inning of this thing. It's, Fed's lowering rates. Stock market hits record highs. Then it was like 14,000 on the Dow. And then something sneaks up on you. It was the bond insurers who insured a lot of this toxic debt that was at the heart of the whole thing. They start to implode.
Right.
And then people are like, whoa, where the fuck did that come from? And then literally a month later,
that was Countrywide. Did Countrywide come first, or the
Countrywide came?
The bond insurers come first.
I think Countrywide was one of those canaries in the coal mine early on.
Yeah.
But everybody thought they had it contained. You know what I'm saying? We were just moving, methodically. And then the bond insurers, and then Bear Stearns.
Yeah.
And then it was off to the races. And you kind of then it was like a lull where there was that summer that, I remember between September when Lehman imploded and Bear in March, there was a lot of stuff that went on. It was, Fannie and Freddie, and it was like there were just all these stopgaps. And then, but we were essentially moving towards crisis mode.
Right. Well, one of the things that we can talk about, since we're talking about Bear Stearns and we're talking about crises and credit crunches and whatnot, let's talk about Blue Owl.
Yes,
So,
are the darling of the private credit market.
Yes,
right?
Stocks at $10, was at 18, and you can see by the blue line there that the short interest has risen basically in call it a year, 3x from 50 million
Yeah.
shares to about 150 million shares.
Oh yeah.
And you see the stock price. But what's really more interesting, it's about 125 million shares. But what's more interesting is it's what's happened on the long side. So
You do see some buying coming,
well, so
right?
here's,
Am I
here's but
missing it?
here's something that's fascinating. What makes S3 S3? The gray line there is the hedge fund long positions. You can see
Steady now.
steady, but not really a factor.
Yep.
They're not an owner of this stock. They're not a believer in it. It's interesting,
Yeah.
right? Because who's long technology, who's long semis is the hedge funds.
Right.
So they're long the people receiving funds and renting out the funds. They're long. They're not long the supplier. Who is long the supplier? Meaning Blue Owl, active long managers. So big money mutual funds.
Oh, interesting.
Look at the blue line at the top. Collapsed.
Right.
Short interest rising. So hedge funds not involved. Active long collapsing, throwing in the towel. Short interest rising. Who's controlling the stock? The short interest is controlling this stock at this point. And at some point, you've seen a little bounce in buying from the
I
mutual
saw.
funds.
Yeah.
If that drops more, this is your story.
And what is the story?
Well, you got private credit has some problems.
So this is the sort of bellwether for private credit,
It is.
and we're not out of this yet.
That's that long blue line right there falling and the black line rising is telling you that there is a potential collision coming up.
Meaning the stock implodes. The
Well,
people
stock,
betting
the stock could very easily go from 10 to 4.
and people are betting that could happen.
Rising,
Something's going to happen.
short interest rising, pressing, accelerating.
This is a good story. So this is a headline. The S3 data is flashing huge warning signs on Blue Owl.
Yeah, it is.
And by the way, we're just telling you the data. We're not saying we think we know this is going to happen.
This
We
is
don't
the
know.
positioning in the marketplace.
The
right?
market is positioning for that.
So what's so fascinating to us is you and I have talked about CoreWeave a lot
Right.
on this show. Now, Blue Owl actually supplies funding to CoreWeave, and we remind everybody
That's interesting. Yes.
CoreWeave
right.
is buying GPUs and renting them out and hoping that the rent that they get for GPUs. And I think what's fascinating about that is that people talked about depreciation. You heard all these, I would say, bear porn. You have a lot of activists, short sellers writing a lot of research about how these chips depreciate to zero. And it turns out that's not true. There is a used car market, so to speak, for these chips. So CoreWeave is doing fine, actually, since we talked about it and said, this is really the leverage stress test for the NVIDIA business model. Stock's taken off. Now it's
Right.
come back and whatnot. But it's had a pretty good run. So there's a schizophrenia.
So the CoreWeave is suggesting that Blue Owl can get through this.
Correct.
Okay.
But the money isn't making the connection between the two.
Interesting. Not yet.
Not yet. And so what they're saying is they got a redemption problem. They got gates up. You got retail involved. I know the owners actually, I think they did something with their margin loan. That was always a problem, and they got rid of that, which was a great move, by the way. That was the right thing to do. And you would figure the market would say, well, wait a minute, CoreWeave is doing pretty well. There's a market here. The depreciation isn't zero.
Right.
Okay. What's wrong with Blue Owl? Like, they can probably go out and raise money, and data centers are still being built hand over fist. And one of the things that fascinates me is you have some of the smartest people in the world and the richest. Usually when the stock market crashes, because we're talking about crashes, the smart people are out.
Yeah.
This one, they are all in. Zuckerberg, Ellison, all these guys are spending hundreds of billions of dollars, all in. So
yeah,
what does that tell you? When rich, incredibly smart, successful people are throwing all their chips at something, That is maybe why the market is up.
Yeah. I mean, yes, this is
The smartest, best businessmen are chasing the best idea with the most money, and they're not exiting. They're in all in.
They've been wrong before, though.
Well, you can point to the metaverse as being wrong.
Yep.
Did it matter?
No.
Okay.
No, not at all. By the way, Oracle over the past year is still up 17%.
Yeah. So, I think there's some pretty good. There's some good crossover here with positioning, particularly around Blue Owl. We found
Yeah.
that pretty interesting data to talk about.
So we
this
should
week.
follow these numbers on Blue Owl because and Core Weave and the short and the
100%.
long interest, because this seems to be at least in S3's modeling, a bellwether for private credit.
It has been for a while.
And it has been.
I don't think, unless someone else comes up with something that says, okay, something else is a bellwether. Blue Owl's been the bellwether.
Yeah.
It's the fastest growing.
But the Core Weave story as it relates to Blue Owl
underreported.
Suggests that maybe we're going to get through this. So those are the two countervailing schizophrenic trends
That's exactly
on
right.
private credit. And we give you both sides here.
We do,
which is
because
what we're supposed to do. And you make up your
says.
mind what you want to do with this.
Exactly right. That's what the data says. So we have one pick this week, which is RBC, which is a bearings, precision bearings in aerospace and defense. It's a market cap of $19 billion.
I always thought RBC was Royal Bank of Canada.
Yeah, no, there's an RBC bearings company. By the way, $19 billion market cap is nothing to sneeze at. It's a bullish call, earnings report Friday morning, and that's our pick for the week.
RBC, not the bank.
Not the bank.
The bearings. What is a bearing? Like those little balls?
Yeah, the balls.
Little balls.
Little balls, the precision components.
Precision components. Just what my expertise is in precision components. No, just kidding. By the way, we are on our 1-year inaugural.
Yes.
I know we mentioned that before, but we should just think about this podcast and what we're trying to do, and we are picking up some steam. We are getting some critical mass. I ran into two people anecdotally yesterday who said they love the banter. They say we almost sound NPR-ish, which is, no one has ever confused me with an NPR host.
I was going to say NPR and Charlie Gasparino. That's the first time.
I've been on NPR, but I've never.
That is a long, short trade I've ever heard.
Yeah, but I'll take it. Listen, we've had some great guests. Everybody from CZ to our friend Jack Devine from the CIA.
Gillian Tett, Robert Koenigsberger.
Koenigsberger was brilliant.
Fantastic.
And laid out a lot of stuff that we're seeing right now, particularly as it relates to Venezuela.
Very prescient.
Really smart guy. Marco Hodis, who, is my man. It's crazy, but, love him.
Ken Tropin.
And
he's great investor.
Yeah, I mean, we've
had a Robin Hood.
We've had some really good ones. We'll try to get some more.
Yeah.
Larry thinks that he'd do it.
That would be great.
But you're going to try to get him. I'm going to work on Jamie. When you see him, when I see him, he goes, yeah. Just call Joe. Joe Evangelistis, is his PR guy. He's an old friend of mine. And then Jamie's going to Europe. So we'll see. He's a busy guy. I don't begrudge him.
Well, one thing I think is that the residents of New York City should, I think, thank you for keeping our taxes at least somewhat lower.
Yeah.
Given the current administration. You made the front, just so everybody understands, Charles reporting made the front page of the New York Post, 3 days out of 5 or something like that?
Yeah, I had a good streak there the last 2 weeks, particularly last week when we were reporting from Milken. I was reporting some of the stuff that Ken Griffin was saying about Mondami. Mondami made him the poster child for some stupid tax and did something which I think was pretty,
he basically
reckless.
He basically doxed them.
Reckless, because you don't put targets on people, right? Because we're in crazy. We're in crazy town right now with society right now and the political atmosphere. So that was stupid, and the tax is stupid, and so we did a bunch of stories about that and how Apollo is now moving, and we did an update on that there. It's either the Miami area where they have some offices or Austin, Texas.
Yep.
They haven't decided yet. I asked them yesterday, any updates? They said no. leave me alone, go away. I mean, one thing about these funds, these private equity funds, I have pretty good relationships with them. But they don't like being written about, no matter what. Because if I write about you, they're getting 15,000 calls from other reporters.
Yeah, of course.
So, but be that as it may, that's my job, to kind of be a pain in the ass, but that's what we do.
You ask the tough question.
And, I try to do it
in the right question.
And I try to do it in a nice way. And if I make a mistake, I try to correct, so that's what we do here. If we make a mistake, and by the way, what I love about you is, while your track record is great,
We admit our mistakes.
when you miss something, you say it, like, we didn't hit this one. And I think that's the power of risk and return. It's that we're going to try to be completely transparent and about the data, about sourcing, about what we know.
Einhorn was on CNBC today. What was it yesterday? He was on yesterday, I think. And I think the Irisone conference, right?
Yeah, they had the
It's an
Robinhood
amazing
thing
conference.
has been out,
Amazing conference.
is
And
it Sohn, Robinhood? I keep getting those mixed
I
up.
think they're, that's a good question.
They're
I think it's its own thing.
They're both charitable.
Both charitable events, and but Sohn, I think, is more. You come to the event
Right.
with an idea and you present it.
Yep.
And he said, "Look, it's my 30th anniversary of being in Greenlight. We got there 1 year at a time, and in a great year, I'm right 70% of the time.
Yeah, and that was 2008 for him.
I'm right 70% of the time. A lot of years we're not. So I think a great either data company, great business, just says, look, we don't get everything right all the time.
You can't.
Right? There's 7 ways we think we're going to get to Rome. Here are if 3 of them work, like, we're great. And that's really what good business people do.
Yeah,
They try to put 7 chips on the table, and
you
they
try
say,
to fess up, and then
you
explain
learn
why you
from
got
your
it wrong.
mistakes.
Yeah, and that's what I try to do in my reporting. And those rare occasions I screw up.
Well, we all do.
Yeah.
That's life.
Again, it's been a pleasure the last year. Here's to another year. And here's to growing risk and return. And again, what we're bringing here is something different, educated, smart, no nonsense, no bullshit, commentary and analysis.
I think that's a wrap.
That's a wrap. So we're going to leave it here, ladies and gent. I'm Charlie Gasparino from Fox Business, the New York Post, with my partner in crime, the granddaddy of data, Bob Sloan of S3 Partners, the biggest independent data provider on the Bloomberg Network, and the co-host of Risk and Return. See you next week.